Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast, and not just from one accountant's perspective. I'm AJ Wheeler, one of your hosts. With me, as always, is Mark Palardy.
Hey, everyone.
Got a great episode, a couple articles for you. Mark's going to kick us off with 10 end-of-year things to get your 2022 off to a great start. We'll go over the list. Are they missing something? Are they maybe, full of BS? We'll find out. Second article is actually Everybody Database Sucks Part 2. This is part of a 4-part series that we find really interesting, and we'd love to talk about it. And we think there's some parts that maybe are amalgamous to the accounting department or your accounting system. So good discussion around that. Then we have an article on how strategic philanthropy has harmed our sector and why it refuses to die. This is kind of an article on a very opinionated take on foundational grants, and we'll take a look at what the author thinks and maybe how we disagree on whether or not foundations really help anybody, and how grantees lie to them. We'll find out, and we'll dig deeper into it a little bit later. And then we have our topic of the week, or a question of the week, which is related to a first-time audit. How often should you have an audit done? Should you have an audit done? And is it a requirement of a grant? What you should look for in an audit, and kind of how much they cost, to be honest. But anyway, Mark, you got our first article. Why don't you take it away?
Hey, everyone. Welcome to the new year. We're starting out here with an article called 10 of the year-end tasks to get 2022 off to a great start. So this is a pretty simple article. Just wanted to kind of put out there some of the things you probably have already thought about, but also some things to think about as you're having that clean slate of 2022 coming in strong. So first tip is clean out your desk or office. You may have had some time over the holiday break. Might be a good time to do this. If you're an accountant, you might already be behind the 8 ball and there's no time to do this. Unsubscribe from unwanted emails. This one definitely hits home for me. A lot of junk emails get piled up, and you get on a lot of people's lists, especially if you belong to LinkedIn over the course of the year. Review your work processes to see what works and what doesn't. So this probably should be an ongoing process all year long, but definitely the beginning of the year is a good time to do that. Update job descriptions, right? If people have changed their jobs in the middle of the year, it's time to update it. Time to get with HR if you have an HR department and make sure everybody is clear on what they're going to be doing for the new year. Do a brain dump. So I guess what's meant by this is, if there's stuff that you need to get done, it's probably sitting there in the back of your mind, occupying space and time, and maybe even causing you some worry. Just get it all down on paper and compile a list of all these things that need to get done. Start planning your 2022 advertising or development editorial calendar for things you want to publish. If you have blogs within your nonprofit you want to put out, if there are certain initiatives or programs you want to roll out at a certain time, get that on your 2022 calendar so you have an idea of what you're working toward. One might suggest you should already have it by the time you hit 2022, but if you don't, now would be a good time to do that. Review your software for tech and other upgrades. Obviously, this needs to be in conjunction with your budgeting, because you can't just throw money if it's not in the budget. But looking at your tech needs beginning of the year before it starts ramping up is a good time to do that. And then start brainstorming your goals for what you want to have happen in the year, or maybe even the next 5 years, because it's important that you have a vision of where you're going. And if you don't, even on the micro level within your department, you could face some blockages as you get stuck just doing the day-to-day stuff. AJ, there's probably some more ideas. What do you think of this list? And you have any more you would offer?
Yeah, I think the one thing that bugs me about this article is this is stuff I think you should be doing like monthly almost, like not just, it's the first of the year, let's, follow these 10 tips or whatever it is. But I think like And one thing that I don't see is any kind of collaboration or like goal planning, and I think that's really what the beginning of a fiscal year means. If you're a calendar year end or you're moving into, or this is like your halfway point for the year, I think evaluating your strategic plans and sitting down, that's what I really see as either a beginning of the year or midway through a fiscal year. Really taking a look at where you sit with your strategic goals and adjusting those goalposts if needed. But the list that she has here, I think you need to do on maybe a monthly or quarterly basis. And especially like if you're reviewing your software and other tech to consider upgrades, I mean, that in and of itself is messy because you need a longer runway than just, hey, it's the beginning of the year, let's add more apps and like change our accounting software or donor database software. Like you really need to consider those tech and software upgrades like with a longer runway than just, hey, over Christmas break, I thought about, implementing 2 different databases and a new accounting system. And, I think we get this done by the end of January. That is, a recipe for disaster in the new year, or at least in the beginning part of fiscal, or even midway through a fiscal year.
Yeah. Hold on right there. What I would suggest is maybe not switching your software program out, but considering process changes, right? Because you could have a program that's working fine, but you've noticed some faults or some flaws in the way your process is working. So if you could actually jump in there and use the time when you're quote unquote not busy to kind of figure out, well, what way can this software work? It's kind of like Excel, right? We all know we're using about 10% of Excel's functionality, and there are probably tools in there that you could create a better workflow for yourself. So sorry, I didn't mean to interrupt you, but on the topic of software, I think it is a fair point. Not necessarily, I totally agree. Implementing new software is kind of a beast, and we'll have an article about that probably on the next podcast. But yeah, anyway, go on.
No, I just, you articulated it correctly. I think, a lot of this stuff that she's mentioning, like should be done on a regular basis. You need to be exercising and reducing burnout, and you need to like reevaluate. I mean, heck, if you only wait till once a year to clean out your desk and office, I mean, there'd be piles of paper around here for me, and like, and we're a paperless office. So it's like, I don't know, or I'd have dishes and takeout piled sky high. I mean, I think it's, a lot of this stuff needs to be done on a reoccurring basis and not just waited till at the end of a fiscal or calendar year end to do. So good. I think, discussion points and good points she makes, but yeah.
Yeah. And I guess the other elephant in the room, and I'm not sure if she's an active working accountant, but for those of us in the accounting field, January is not the best time to start implementing new things, right? You've got end of year payroll and W-2s coming up. You've got 1099s that need to be issued, regardless of what level you're at, whether you're on the ground doing those or whether you're at a higher level supervising that process. And everybody's got their month end close, and you even have some eager clients who want to get their stuff to their tax accountants early. So there's a lot of work to be done in January. So, waiting till the last week of December to make these decisions, I think, AJ, you're spot on. You're going to be in a world of hurt come January. I think our next article is from you, AJ.
Yeah, this one's a follow-up to last week's podcast. This is a 4-part series from Philanthropy Daily about how everybody's database sucks, and this is part 2. So what part 2 really dives into, and we'll have links to the articles in the description of the YouTube video, or if you want to look it up, I mean, there's not too many articles called My Database Sucks. But anyway, I think the author really lays out in a 4-part series a really good, and in this part of the series, he's talking about essentially the people needed to run an effective database. And so he talks about having roles well defined, and it doesn't really matter. This doesn't mean that you need a person in each one of these slots. A lot of our smaller nonprofits are like, hey, I only have one person running the database in mind. But I think what's important is to realize that these are crucial roles in the place of the database. And actually, I'd go so far as to like connect this to the accounting department and really think about the roles in the accounting department as well, and making sure that those are staffed. So we can make, kind of comparisons here to an accounting system as well, and not just leave it on the kind of donor database or the development department's kind of database. But let's get into it. So there's a database administrator. So this is kind of the single most important role that every organization must fill. And essentially what the database shepherd, he calls it, does is they're the role between shared role between a team of admins, and essentially an organization's data is their most valuable resource, they're saying, when it comes to donors. So essentially what they're not doing is being obsessively blockading or stonewalling chains or requests, but they're shepherding how the database is shaped and the information that making sure that the information contained is complete, or, from a high level kind of way, and that to make sure needs and desires are fulfilled effectively and judiciously, as he says, for the database. Next person, he says you need an executive champion, need to make these expectations clear from the top down and give their staff the latitude to accomplish them. So what you really need, and we've talked about this before, the most successful nonprofits we see are ones that work in harmony, where the development department and the accounting department talk together. The executive director kind of talks with everybody and shares a shared vision for what's going on. And it really is no different when we're talking about such a narrow field as like the database, or the donor database, or the giving database. And I think, having good people in place and having that communication between levels is of course, vital, I think, in having an organization run well. And it's no different with a database. Third one is data entry. I don't know how many times I see this, but people often overlook or undervalue the people on the front lines putting the data in. You need to have a well-trained, detail-orientated data entry, not, in this world of automation and self-filling forms and everything. We forget that stuff needs to be tuned in and really tightened down when it gets put into the system, so that you're not having mistakes in your data entry. I mean, some of the most important jobs at a nonprofit in the accounting department, to kind of contrast this, is like AP and AR. Without that good day-to-day, week-to-week recording of data coming in and having it recorded correctly in like an accounting system or in a database, your information is no good. And so really putting an emphasis on training, hiring qualified people, paying them enough, even though it's kind of like considered an entry-level position, is vital in keeping the integrity of your data there. What happens is if you have somebody that isn't doing their job or isn't up to snuff in those areas, this goes for accounting or development, the higher level people are going to spend more of their time fixing those problems than they are to be able to use the information and do high level analysis and you really use the information for what it's intended for. So making sure that those people are happy, trained, and on task is like job number one, I think, of trying to make sure that your data that's getting into your accounting system or your donor database is well, curated and recorded correctly in the manner that is, historical. And if there's any changes, that it's communicated to everybody along that path and not just at the top, in broad strokes. So the other thing to think about is end users. Who's using these? In short, it's fundraisers, of course, but end users that need to access the database on a regular basis for their work. At the end of the day, they're the primary individuals who'll be using it. There's auxiliary users, kind of like how many people did we reach this year? Kind of those things that go in the annual report that you can pull out. But really, it says that these people for the database are for additional purposes. So they mentioned, think of accountants, marketing professionals, and program professionals, operations staff, and so on. He's calling these folks auxiliary users. Mark might have something to say on that, but we'll get into it. So essentially it boils down, what's the takeaways from this? Here's some questions to ask. And this, I think, holds true for the accounting department or the accounting system, as well as the database system. Who fills the roles in my organization that we talked about? Are any of the roles being overlooked or neglected? if a role is not being filled well, can that be an internal transfer? Do we need a new hire? Can the person that's there be trained up to be able to make sure that those things aren't? Ask those questions, make the roles and corresponding responsibilities explicit. I've seen this over and over again in an accounting department and in a development department, where people kind of have lofty titles and kind of vague descriptions of what they should be doing, and they figure it out on their own. That's great if you're a small startup and you're trying to refine your process, but you need to codify that and give them the time to write down how to do that stuff. If that person finds a better job, wins the lottery, moves to Aruba, whatever it may be, you're going to have somebody replace them, and you don't want to go back to square one and have them figuring everything out from the ground up again. So making sure that this stuff is written down and procedures and processes and examples are available so that somebody is very easy to come in. That person goes on vacation even. They don't need to leave the job, but so that the wheels don't fall off if you lose a key player in this. So, Mark, I'm sure you have stuff to say on this, but I thought it was a really interesting read and some good points in there.
Yeah, I think it's a pretty balanced article and has a good explanation of what some of the roles are. I do take issue with some of the pieces in the article, though, right? And I've seen this before and have mentioned this before, but when somebody comes from a place, it sounds like this guy works in IT, and when his first thesis is that the single most important role every organization has is the database administrator, yeah, maybe not, right? There are many important roles in an organization, and you certainly can't say that the tech role is the only important role or it's the most important role. It is an important role, but by also saying that the database is the organization's most valuable resource, I might argue that people are an organization's most valuable resource, especially in a nonprofit, right? People who believe in your mission, and we've discussed that on this podcast before, but thinking that it's all about a database and that all these people are just, functional parts of the machine, cogs that you can just replace as long as the database is there and solid, it rings a little cold to me. And AJ alluded to another one of my issues, that the end users for this database, he's for some reason holding up development to be, on a pedestal, and then putting accounting and some other users as auxiliary. And, frankly, you need to have a robust enough database that it's going to serve more than just one department, right? It should be robust enough so that both accounting and development can get exactly out of it what they need. I think the point that he makes is that development really should be the one coming to the table to help make the decisions, and then you can factor in other people's considerations. But, I've worked at organizations where the IT manager does survey and take into account all the users, and the database runs very well. But I've also been in organizations where the database manager, favors one department over another. And you can tell when you're trying to get in there to get the data you need, you're like, wow, this is really geared and put together to serve one master and not to help the overall organization. So I would say that would be my caveat. I think, though, he does give a good explanation. And if you're a hiring manager, know who are the people in your organization filling these roles. Because if you try to have one person doing too many different things, it's going to fall apart, or some things are going to suffer as a result of that.
Oh, Mark, the most important department in any nonprofit is, of course, the accounting department. I mean, come on, like the people, let's be real here. No, I'm only kidding. But yeah, I agree that, puts a little bit of emphasis on the development department. And I think you're really running like you really have like a three-legged stool in the case of a nonprofit. You have finance department or the accounting department, the development department, and the executive department. And I think they need to support each other, and each one of those needs information out of a database. And especially for the accounting department, you want to make sure that you jive with the development department. I mean, it doesn't do you any good to put down all these potential donors and then you only get like two wins on that. You need to be able to tie in what was asked for and deposited into a bank in the accounting system with what is shown in the donor database. And I think this goes to database management. I mean, if your development department is, kind of siloing their system there and not considering the needs of reconciling it to an accounting system or reconciling it to like the reach of the organization, say for the executive branch of the organization, I think you're really missing the mark and really siloing it for just the development department's use. And I think crafting a good donor database or a database of giving in a nonprofit organization, benefits all those departments equally. And I think, well, maybe not equally. Of course, the development department is going to get the most out of this, but realize that the accounting department needs to reconcile your records to the accounting records, especially if you're under audit. This is one of the audit steps that auditors love to use because it's kind of like a separate department that has different goals. They want to record as much revenue as they can to show that they made wins that year. And the check and balance to that is the accounting system. And they need to jive. And if they're off, you need to know why. You know what I mean? Usually it's timing, right? Development department is operating on a cash basis system. When money comes in, they're recording it. From an accounting perspective, if somebody promised to give at the end of the year or wrote a check on the last month of your fiscal year and it got in the mail and got deposited in, 5 days after year end, that should be accrued. And the only way you're going to know that is talking and looking at the database and talking with the development department to understand when that ask came in or when that grant was fulfilled. So I think, I like the article, but I take issue with some of the pronouncements he made there and definitely putting the development department up on such a pedestal. Mark, do you have our next article for us?
I certainly do. I know this is one that AJ really enjoyed, so we're going to have a good time discussing this. This one's called How Strategic Philanthropy Has Harmed Our Sector and Why It Refuses to Die. And this is by a blogger named Vu. And we've done some articles of his before, his or her. I don't know who Vu is. But the idea behind this is that basically the way nonprofits work right now is that basically funders and donors should be strategic in how they're deploying funds. And, they might have a strategic plan and they might want your organization to fit into whatever their strategic plan is for giving. And basically you apply for a grant based on what the strategic goals of the organization are. And if you're not as part of that strategic goal for the year, then effectively you just don't apply for the grant or you don't get a grant that year. Now, according to this article, he posits that this has done significant harm to the sector. A major challenge for strategic philanthropy is that it can create delusions of omniscience in many program officers. Instead of reviewing grant proposals, querying experts, synthesizing ideas, and respecting those with years in the field, many program directors and officers become auteurs. They begin to see themselves as the origin of intelligence as well as the arbiters of money. So I think this is an interesting notion because, there is a push-pull between grant donors and nonprofit organizations as to who is making decisions on behalf of the nonprofit. So according to this blogger, that should always come from the nonprofit side. They're the experts in the field. They're the ones who are combating homelessness or are an arts organization or have some specific goal or program that they're trying to meet. And they're the ones who are experts in that field. So they should be the ones making the decisions, and that a grantor or foundation who has a specific strategic plan, a strategic philanthropy goal in mind is missing the point, and that they're deluding themselves and basically just creating work for themselves. And it's an interesting notion because not very many people think about it in this way. And he's making the assumption that these grantors are far less involved and far less intelligent about what's going on in the nonprofit world because they're sitting in their golden palaces effectively giving out money. So there certainly are some problems with this theory, but it's an interesting one to think about because there are people, especially on the ground level, nonprofit level, who do believe this way. But I'm going to give AJ our first chance to respond to this.
Yeah, I think so. I understand where he's coming from, right? I understand that, like, especially, I think he comes from kind of, like a person of color, socioeconomic challenged group of people that his organization serve. And I can understand that, like, people with a lived experience in a certain area, of course, know what others in that same situation need. But I want to push back here. Essentially, he's asking for, it's hard for me to understand exactly what he's asking for, right? Like, you have to work in the confines of the system that's set up. And, he's really talking about private foundations here. And private foundations are set up with people with excess money that have charitable goals. And I would argue that a lot of those foundation grants that I have read over the years, especially when I was auditing from 2013 until 2019 or so, something like that, or 8 years, 2012. Anyway, during that time, I saw a big shift in foundational giving towards diversity efforts, equity and inclusion kind of grants that were really, like, I don't want to call them the flavor of the month, but because that's what nonprofits wanted, and it was like kind of an outcome that was in vogue, those grants were going out left and right, and they were required to be a piece of those grant submissions for those foundations. And so, I guess if you don't have one of his things, unless you have recent lived experience with poverty, racism, et cetera, you and your foundation are the least knowledgeable people in our entire sector. I don't necessarily know that's true. I mean, I think you can, read and understand something. They may not be as, in tune or knowledgeable as the people on the ground, but I would argue that they can still make quite a difference and put their money forward towards good causes. The other part that he says is your grantees have been lying to you a lot. Of course, you putting a grant proposal together, you're putting in language that will get you the grant. And ultimately, I think if you're good at crafting your grants, you're leaving yourself leeway in there to be able to provide the services. If you list the services and they're doing what they said, it's like a resume, you fluff it up a little bit, but I don't think it's just an out and out lie on what grant proposals are. I would say that, like, you're making it sound as favorable as possible to get the grant, but I wouldn't call it a lie. You're leaving the restrictions of the money in the hands and at least in the sector that you want to use the money on when you're getting the grant. And lastly, your grantees often don't care about your strategies or your models or your toolkits. I would say that's false. I mean, I think they do care about your strategies. They want to see the most effective use of their money. And if you have a strategy that helps more people with less money, like from the grantor, then they're going to pick that. Their models or their toolkits that they provide are probably like, I don't see why you wouldn't look at them. If you have something better, use it. But I don't know necessarily that you should be taking a grant with their strategy, model, or toolkit. You want a broad restriction on the money to use it for a specific sector, but you shouldn't be accepting money from somebody that's like delegating how you're going to use it day to day, and what money you're putting into a toolkit, model, or strategy. I mean, it should be an overall purpose. And so restriction and timing restriction, not a strategy or model restriction. So I think he's a little off base, he or she or they, or is a little off base here. But I think, it brings up some good points, but I think it's a little off the mark. And I can tell he's had probably a frictional relationship with private foundations and grantors. But the reality is a lot of this money is coming from state and local funds recently. And private foundations, although big, have been waning a bit as far as support in at least the nonprofits I look at. So the money's out there, the money's available, but I don't think it's as dire and as one-sided and lumped in as what he's making it. But that's just my point of view.
Yeah, I mean, I agree with you, AJ. And I think, bringing a problem to light that, there might be other ways to do this is great, but they don't really delve into what the solution is, right? Because I try to think about this from the other side. Okay, let's say we had grantors, foundations who put no restriction on the money, who put no goals in place. They're going to get everything in the kitchen sink as requests. They're going to spend all their time weeding through stuff that isn't even in line at all with what their funding goals are. And honestly, these are foundations. These are people with money who are willing to give that money away. They're not bad people. And if they want to have specific goals and specific sectors that they give to, that's their right. It's their money, right? This sense of entitlement that comes across in this article is a bit much, right? It's like nobody should have any restrictions or strategic plans. I should just be able to apply to any grant I want. You know, I think, in fact, that some of these strategic goals actually help nonprofits, right? If I know that a specific grantor is going for one specific kind of program to, say, help mental illness, then it's going to weed out a lot of people from applying for that grant. And it's going to make my chances of getting that grant better, because I'm only applying for those grants that really fall in line with what my goals for my organization are. If we open it wide up and just remove all strategic plans and say, apply for whatever grant, the likelihood, the percentage that you're going to get money, I think, becomes infinitesimally smaller. So maybe I'm reading it wrong, and maybe it's just that I'm sitting from a place where I haven't been denied these kind of grants, or when I've applied for grants that are specifically based and then I receive them, it makes me feel like, okay, I had a goal. I saw what they were looking for. I was able to tailor it to that purpose, and they saw the value in what my nonprofit was doing. So, you know, I don't see it as the problem. And granted, I am not a person of color. I am not belonging to an organization that faces this kind of discrimination, but I can't see that throwing the baby out with the bathwater is the best solution here. AJ, I think you got our topic of the day.
Yeah, so this is a question that came in. Essentially, the author says, the org I work for is going through an auditing process for the first time due to funders' requests. They're not required to by the state that they operate in, but they believe that the audit will make the organization more reputable and attractive to prospective funders. Essentially, the question is, do they recommend continuing with the audit process on a yearly basis or biannually, or what is the usual cadence of an audit, or if the audit is actually will make them more reputable and attractive to prospective funders? Now, just wanting some insight on auditing and what that means for a nonprofit. So I thought this was an interesting question, because I think it's something that we often don't, I think it's about audit. The reason to have an audit, or having an audit done, what it does and what it doesn't do, and kind of the frequency of that is often talked about, but I don't think we've talked about it on the podcast before. So Mark, I'll let you jump in and kind of give an answer on the question, but I have some thoughts on this as well. But I thought this was a good one to kind of kick it off.
Yeah, and AJ, you're our resident audit expert, so I know you're going to get more into the details. But I think, coming at it from an organization and determining whether you need a yearly audit is going to depend largely on what your goals are as an organization, right? If you're going for specific grants, or you're going for larger foundations that require an audit, then you're not going to be able to get that money without an audit, right? And you also have organizations like Charity Navigator, right? Or, where you're trying to get your rating up so that people find your organizations and want to give to you. Having an annual audit is a requirement. But, the flip side of this is that the money that an audit costs is sometimes really prohibitive, right? You can look at audits, I've seen audits ranging from $5,000 on the very low end to up to $30,000 a year for some of the organizations I've worked for. And, that's a ridiculous amount of money. If you have a lot of money coming in, if you're doing a cost benefit analysis, if you will, to see if the amount you're spending on an audit actually has a return, right? Because you think you're going to get a grant or a foundational award or some benefit from that audit, then it makes sense. I mean, once it seems also, and AJ can speak to this, once you're kind of in that loop of doing an annual audit, it's hard to step away from that, right? Especially if organizations or people find that you've had audits in the past and all of a sudden you've stopped, they might question whether they want to give to you in the future because they're not seeing your current audit paperwork. So those are my initial thoughts. I know AJ will delve deeper because he is a pro.
Yeah. I think so. A couple things. Like, I think it's good to understand what an audit does and what it doesn't do, right? An audit gives you a reasonable assurance that the numbers on your financial statements and the notes to the financial statements are financially correct or materially correct. So what it doesn't do, it's not designed to detect fraud. It's not designed to make sure that every penny of your organization is correctly categorized and is correct. It looks at materiality limits. But what it does do is it gives your organization a nice, fancy signed off financial statement that's been reviewed by an external independent audit source. So I think that's a good distinction to make clear in the beginning, is that it's not some fail safe that what you're doing in your books is absolutely correct. It gives reasonable assurance, not absolute assurance over your numbers. It will look at, an audit will look at your internal control structure and make a determination on whether or not that control structure is working and you have controls in place and your control environment is correct. But it will not, suss out every, nook and cranny of your control structure. It's simply looking at it and saying, is it there and is it working? Auditors will often make suggestions, but I can tell you as a former auditor, it sometimes falls on deaf ears because you only hear from us once a year. So, the same mistake will come up over and over again, or the same comment will come up over and over again. And it can be, annoying, I guess, as an auditor to make a suggestion that you think would help an organization and it falls on deaf ears. Sometimes it doesn't, and it's really rewarding. I think what in backing up to the question about a yearly process, I can tell you from experience that in the first 2 to 3 years of auditing a new client, it takes you that long to really, really understand the organization, what they do and how they do it. And I mean that from an accounting perspective as well as from a process and procedural perspective. So if you're, under the impression that switching auditors will give you a better look at the books, or somebody with fresh eyes or something like that every 3 years, you're going to be paying more money. You're going to be wasting a lot of time because the request for proposal process is long and arduous, and probably takes 6 months to identify somebody that would be your auditor. And I think it really does a disservice to the organization. I mean, I could see switching auditors after 10 plus years, but I think the reason why you would want to switch an auditor is because they're not responsive to your needs any longer. It's kind of like on autopilot. What you really want is an auditor that's responsive to your needs, answers your questions in the off time, maybe off season, about revenue recognition. And you should ask your auditors those questions. They would much rather answer a question up front and not have to dig in and spend extra time while they're auditing with you if it takes 5-10 minutes out of their time to look at a grant agreement and tell you if you're recording it correctly mid-year. That's not an independence blur or anything like that. It's them double checking and making an assumption on a grant or something like that, and an auditor looking at it and saying, yeah, I think you have that correct, or ooh, you missed this. So I think, all that said, I think if you're going to do a yearly audit, you're kind of locked in. I did have an organization that I would audit every other year, and they would do a review in between. And it only really saved them $1,000 or something like that. I mean, it's not a huge cost savings to ebb and flow. The difference is if in an audit process, you have to, it's a brand new audit or you haven't audited them the year before, you have to audit twice. You have to audit beginning balances and ending balances. So it's going to cost more. And I think taking that into account really makes a big difference. I think the cost also, I mean, if you have a $5,000 grant that requires you to have an audit, and you don't have any other grants that are requiring audits, you need to take a hard look at whether or not you want to accept that grant, because I'm sure the amount of money it will take you to have an audit far outstrips the amount of money you're getting from this small grant. So read your grant agreements and understand that too. The other thing is if you're getting money from a state agency or federal agency, they often will do a funder audit on that specific grant or whatever. So you need to make sure with your funders on the grant, the audit requirement. It sounds like this is at an audit, this is at a funder's request, meaning that I think it's baked into the grant, but make sure that you're not having an outside audit when it's done essentially for, when they're talking about a funder audit. So they're two different things. An independent audit firm will come in and do the annual audit. A funder audit is where the funder comes in and looks at their specific program. They do very similar things. They'll look at your controls, they'll look at specific expenses, they'll look at materiality, and they'll request documents. Very similar, but very different in how they go about it, from either a small program chunk to the entire financial statements. So
AJ, is that funder audit paid by the funder?
Yeah. Yeah, you don't pay anything for the funder audit. The funder itself, and it's usually state and federal agencies that do this. You won't see a private foundation enter. I guess I've never seen a private foundation enter a funder audit. But yeah, the state or the federal agency has internal, kind of audit staff on hand, and they'll come and do funder audits. So I think understanding what an audit is and how it works, I think behooves, those organizations that are thinking of moving into that territory. And to be honest, it does make you more reputable and attractive to prospective funders, but realize that it's not a fail-safe for fraud or for misuse of funds, Yeah.
And I would also just put a fine point on this, realize that, if you're working in an accounting department and somebody on your board says, oh yeah, we need to start doing annual audits, or, oh, we need to start sending out RFPs, requests for proposals, to different audit companies. Oftentimes they're not deeply entrenched in the day-to-day workings of a department, and they might not even know what's going on as far as grants and whether you need an audit or not. So just because it comes down from the board, they might just be ticking a box. Well, I'm the good treasurer because I'm requesting an audit. But you gotta make sure, boots on the ground, that this is something you need, and this is something that's going to be of benefit to the organization.
And I think it's good to note, Mark, the time suck that an audit is, right? An auditor is going to come in there and request lots of documents, lots of supporting. You're going to have to prepare financial statements and a functional expense for them. You're going to have to look at the footnotes. They may put together a template for you, but it's really on the organization to provide all that information. The audit firm can't do that for you. So I think, in thinking about having a first-time audit or being able to or even if you have a continuing audit, that time suck. I mean, if you're packed to the gills 40 to 50 hours a week with the current accounting stuff, you need to realize that an audit on top of that is 3 days to 2 weeks of somebody being there asking for things on a regular basis and really diving into the numbers and asking for specific things that you need to go find or have ready for them and prepped in the time before that. So realize this isn't just a money suck, but it's also a time suck to have an audit. And, the more you kind of stall and don't make it happen, the price goes up. I mean, you're talking about a service that's, although not billed by the hour, they're definitely looking at billable hours when they go back to, send you your next invoice. So
yeah, and not to mention the money that it's going to cost if you have to pay overtime or hire some temps in to help get some of that work done. It's not just the cost of the audit. There's also the opportunity cost of things you could be doing, and there's a sanity cost, because sometimes audits can be rough.
Yeah, absolutely. I mean, auditors come at it from a different angle, and often, if you're working on the inside of an organization, or as we used to call it, on the other side of the table, you're not used to what they're asking for. Auditors, I mean, if you're like, if you're working in a nonprofit and you've just learned the accounting, nuts and bolts of what you're doing, you're not thinking about a reconciliation of your prepaid expenses. You're not understanding what the new revenue recognition ASU is. you may get blindsided by these things, and it takes a lot of time to read and understand that stuff. And auditors are going to be up on it, and you're going to have to either ask for help from them to understand what they're asking for. So again, more time in understanding what they're asking for, or understanding the changes that are happening. In the last 3 to 5 years, there's been more changes in nonprofit accounting than we saw in the last 20. And the last big change was them moving from like a governmental fund accounting to, the thing that we see now, which is essentially a small business net asset model of restricted and unrestricted funds. So just realize that, over the last 5 years, there's been a bunch of changes. And if you're still operating under a system that maybe was designed 10 years ago, you might be out of compliance or revenue recognition in some of these new pronouncements, and realize that the auditors are not, this isn't an IRS audit. This isn't a gotcha audit. This is really, they want to work with you to make sure that your books and records are materially correct. And they want to make sure that you get this ironed out. I never like giving out findings as an auditor, and I never like telling them somebody that their books were screwed up, but it happens and you move on. So realize that if you're having one and you have findings, it's not the end of the world. It's just stuff that you need to fix, and move on. So anyway.
All right. We went a little far field with that one, but I think there's some great information. Thanks, AJ. And thanks to all of you for joining us for another episode of Profitless on Purpose. We always appreciate you being here, joining us on YouTube or on one of your podcast apps. As always, please comment down below in the YouTube or send us a message on @ProfitlessPod on Twitter. So for now, happy 2022, and we'll see you next time.
Thanks, everybody.